I'm going to get started by thinking about some of the actions multinationals should take or consider over the course of the year to make the most of their businesses in 2022. Specifically, there are a couple of things that we recommend our clients do to execute their plans. I'm going to focus on shipping and logistics costs, first of all, uneven growth between markets, rising competition, and elevated cost pressures. As a result of these major trends that companies are facing in Sub-Saharan Africa in 2022, we recommend that companies enhance their market monitoring, review which markets they can allocate more resources to in order to capture growth, and also consider reassessing their pricing strategies and product portfolios across Sub-Saharan Africa. There are obviously many additional actions that multinationals can take, but these really summarize the main most efficient and most appropriate approaches we believe many multinationals should take over the course of the year. So when we turn to the macroeconomic growth outlook for Sub-Saharan Africa in 2022, it's always worthwhile taking a step back and looking at how economies performed throughout the pandemic and into 2021. So generally, 2021 was a positive year for Sub-Saharan Africa. It was a story of accelerating growth in most markets. And I really want to highlight the fact that we've seen very strong growth and very rapid accelerations in medium and small-sized East and West African markets in particular. Nigeria also surprised us to the upside at the end of 2021, partly because of a resilient private sector and higher oil revenues. But it's also worth noting that several key markets haven't shared this very upbeat growth story. So although South Africa did rebound in the second quarter of 2021, we saw economic growth slow very significantly in Q3 because of unrest and power shortages there. And the Q4 GDP data will be published this week, and we are expecting to see fairly moderate growth from that market. Angola has also continued to struggle through a 5-year recession. It's beginning to emerge from this very protracted period of growth, but overall, the economy is still struggling with major structural problems, such as its extreme dependence on oil and very high public debt. So overall, a positive story last year, but some very mixed performance, especially when we look at some of the bigger markets like Nigeria and South Africa. Turning to the outlook for 2022, I wanted to begin by looking at some of the drivers for the region in Sub-Saharan Africa. Happily, overall, the drivers are broadly positive, and this is even following the developments that we're seeing in Ukraine. So we still believe that both globally and domestically in Sub-Saharan Africa, there will be positive growth drivers supporting the outlook. In particular, we are seeing very high commodity prices. With the Russian invasion of Ukraine, we've seen commodity prices rise even further. So this will support export revenues and government revenues in many markets. We've also seen very positive private sector sentiment, especially from an investment perspective in Sub-Saharan Africa. And also from a COVID containment perspective, most governments are pursuing very loose COVID rules, which does mean that the risk of lockdowns is very limited. However, we are very worried about shipping costs, the impact on trade to Sub-Saharan Africa, but also fiscal pressures and political insecurity risks we are increasingly concerned about in Sub-Saharan Africa. In our base case, these are already beginning to drag down on growth. So overall, fairly positive drivers in Sub-Saharan Africa, but a few risks that are looming on the horizon. So what do these drivers mean for the growth outlook in 2022 and into 2023? I just wanted to make a note here that given the recent disruption globally caused by the crisis in Ukraine, our forecasts that you see in this presentation are subject to revision, either up or down. But overall, we still want to present our main macroeconomic outlook view for the region. So in terms of the outlook for Sub-Saharan Africa, generally, we are expecting to see growth continue to accelerate moderately in 2022 and in 2023 as well. We expect certain markets, especially in East and West Africa, such as Cote d'Ivoire, Kenya, Tanzania, Senegal, DRC, all to be key sources of growth for multinationals and also lead the macroeconomic growth in the region. but the outlook for other markets is a bit more muted. So although Angola's economy and Zambia's economy and South Africa's economy, they're all growing, we expect them to face protracted periods of weak economic growth because of fiscal pressures and domestic structural economic problems. So certainly this very sort of upbeat growth view that we're seeing across Sub-Saharan Africa is not shared in every single market. I also wanted to mention Ethiopia. Ethiopia is a bit of a special case because of its civil conflict at the moment. Although the growth outlook looks very upbeat by Sub-Saharan African standards, what you can see here, so growth of about 5 or 6%, actually represents a fairly substantial downward revision from our previous forecasts only 6 months ago. So something to bear in mind over the next year. Daniel, I'd love you to bring in the view for Nigeria and give us a sense of what's driving the growth outlook, especially in light of the new oil price view.
Sure. Nigeria's growth will be modest in 2022, slowing to around 2.8% year on year from last year's 3.6% year on year rebound. Essentially, the economy will resume its protracted recovery from the 2016 recession this year. The expansion will be driven by the non-oil private sector, which will be led by IT and telecoms, wholesale and retail trade, manufacturing, transport and storage, finance and agriculture. While oil production will remain weak amid various domestic challenges, it will stabilize instead of continuing to fall. And furthermore, the recent upsurge in global prices for Nigeria's oil and gas exports will provide extra support to the economy through export earnings and government revenues as they are recycled into the wider economy. Still, FX challenges and regulatory risk will remain and will continue to constrain inward FDI and portfolio investment below its potential, even as stepwise currency reforms are made and the tech sector continues to attract global investor sentiment.
That's great. Thanks, Daniel. And it's worth also noting, I wanted to mention a minute on South Africa as well. So in South Africa's case, as I said, facing quite significant structural economic problems. After fairly healthy growth in 2021, the economy is expected to slow in 2022 to about 1.7% growth year on year, followed by another deceleration in 2023. As you can see, this is running counter to most trends in Sub-Saharan Africa. And the reasons for this is chronically high unemployment, severe electricity shortages, increasingly fragile public finances, which we expect to really bite in 2023, and also rising private sector uncertainty around the elections that are coming in 2024. So just a bit of an explanation for why South Africa is expected to lag behind the rest of the region. When we look at the pace of recovery for economies in Sub-Saharan Africa from their pre-COVID levels, generally what we are seeing is most Sub-Saharan African markets have made quite substantial gains. They've already reached their pre-COVID levels and in some cases substantially exceeded them. So I'm calling out countries like Cote d'Ivoire, Senegal, Kenya, DRC, for example. But it's also worth noting that countries like South Africa, Angola will take until 2023 or 2024 before they reach their pre-COVID levels. So very helpful in terms of making or updating your assumptions around growth goals and demand levels in these markets. Not every market in Sub-Saharan Africa will see a return to pre-COVID levels at the same pace.
Hi, my name is Krista Reganey, and I'm Marketing Director here at FrontierView. I'd like to thank you for watching a segment of this webinar. If you'd like access to the full video and our latest insights, data, and research, sign up for a free trial with us today. Simply scan the QR code on the screen.